Time to focus a bit on the global picture as well. Manish Singh, Chief Investment Officer at Crossbridge, joins in right now with his thoughts on how does he see this whole tariff issue, trade war, and the resultant impact on risk assets. Manish, great having you. Thank you for taking the time out. The tariff's going to effect in a few hours from now, if not already, right? What do you reckon is the impact on various measures like inflation, discounting rates, risk assets, and the whole and the whole question of flows?
If you see what we have got so far by way of announcement from President Trump, this is going to have a negative impact straight away. It also depends on what the reaction functions are going to be. So if you take one by one, if you look at Canada or China, if Canada does a retaliatory tariff, which is what they're saying that they may do, then that may have some negative impact on the U.S., but far more negative impact on Canada. Same thing happens with China as well. Last time China didn't do as big a retaliatory measure if you compare to what U.S. had announced on China. So we have to look at what the reaction function is going to be. My view is that overall, if you take a slightly medium-term view, the tariffs are going to come down across the board, across the country, because that's exactly what President Trump is trying to achieve. Because his keyword is reciprocity. So if you're going to put tariff on my product, I'm going to put tariff on your product. If you bring the tariff down, I'm going to bring the tariff down too. So that's what he's trying to achieve. So people may not like it, but he's doing what he has said. Now, you would expect that a rational person would think that why am I putting tariff on American products if I don't want my products to be tariffed? And therefore, I should be bringing tariff down on my exports to the U.S. And that's where I think we are going to head eventually. Now, will that be in a week's time, a month's time? It's difficult to guess. So if you have a short-term position, and if you're doing a short-term trade with leverage, then you are in trouble. But if you're taking a more considered view on medium term, then you will have plenty of opportunities to put your long trade.
So how would you play it, Manish? Sorry, this is Harsh also joining in. What is your perspective on? Hi. How would you therefore see this play out, and how would you play this in terms of a trade?
Sure. So for me, I mean, I'm going to put some US trade today as well when I get into office, because it has again opened up a nice opportunity to go long. My view is that things are moving very, very fast. You will see it's quite likely that, Zelensky goes to White House this week and signs a deal. Who knows? If you see that happening, then suddenly there'll be a risk down. On tariffs, Canada has said that, but let's see what they do. If you look at Peterson Institute, they have published a chart last night, or I think they had done a study last month. It's very clear that the impact on U.S. is going to be very small compared to impact on other nations who are going to retaliate to the tariff that the U.S. is going to impose. And those things are going to be talked about and discussed. So my view is that tariffs are going to come down. And whenever I put a trade, and we had this discussion many times with Neeraj, is that I look at 6 months, 12 months horizon when I put the trade. So if something has sold off 10%, I'm very happy to take and add to the position on those things. So yes, you will have mark-to-market pain, as I'm sure people would be having this morning, given what we saw the sell-off in the market yesterday. But, that comes with investing. You have to bear your mark-to-market. If you think that your stocks are good, you should keep buying it at whatever level is good for you. But for me, I'm going to put some long trades today, yeah.
Manish, the final question is the result. The impact, and maybe you dwelled upon it briefly, but the impact on the DXY, because one would have anticipated that with this happening, the DXY would strengthen, but yesterday, I mean, DXY really took a pounding, if you will, relative terms. What do you reckon is the natural course for the DXY over the course of the next 1 month if tariffs go into effect the way they are and there are counter tariffs?
Yeah. So if you look at President Trump's announced goal, one of his goals is to get dollar weaker. Now, I'm not saying that, if you showed this chart to Trump, he would be happy that it was a tariff and And I hope nobody shows that chart to him because then he'll double down. See, I think the dollar getting weaker, if you look at just one-day measure, it just doesn't tell you anything. I mean, FX is a very, very, very volatile market. You can't just base your views on just one-day movement. If you, again, dollar is very strong. We all know that dollar has been strong, and it has been strong for the reasons we know, because there is no other currency or economy that is doing as well, at least not an open economy, because China is doing well and its currency is doing fine, but not an open economy where capital flow can go in. So dollar takes all the capital flow, and that has been the one reason why you are going to see weakness in dollar is of what's happening in Europe. So you saw equities rally in Europe yesterday on the basis that Europe is going to do more defense spending. Europe is going to basically engage more in global economy, and they will look after themselves. And then you got an announcement from Frederick Merz, the incoming chancellor in Germany, that they're going to, I don't know exactly what he has said, but I saw some news about he's going to get past his debt rule and the government is going to spend 200 billion euros or something of big money. You saw bounce in all the UK stocks because UK has come out really well, if I may say that. If you look at the announcement on the weekend, UK has repositioned itself at the center of Europe once again after Brexit, and that's going to play well with them. So if the capital flow moves into Europe, moves into UK, then there will be some weakness in dollar. But I do not see how dollar can continue to weaken given the strength of the US economy and given how well the US is doing, and there's little by way of competition. Eventually, when dust settles and the risk goes off, and we don't know when that will be, then you would expect people to leave dollar and go into risk assets, and then you would have some weakness in dollar, or there are rate cuts and that brings weakness in dollar. But I don't see that as a trend. Not now. At least I don't see that for next 6 months at least, that you'll have a weak dollar.
Okay. Okay, Manish, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your thoughts. That's Manish Singh of Crossbridge with his thoughts on this tariff war. And